This is Energy Frontiers for the week. My name is Justina Okechukwu, and we say thank you to the African Energy Chamber for proudly supporting every edition of the program. As always, we begin with some of the biggest energy news making the headlines at this time. The International Energy Agency has predicted that oil demand growth will fall to 900,000 barrels per day in 2024 and 950,000 barrels per day in 2025, with a slowdown in Chinese demand being the main driver of the weaker than expected growth. The Paris-based agency highlights the latest moves by OPEC and its allies to stabilize the market, but says the alliance faces challenges in balancing supply and demand amid rising production from non-OPEC members. On its part, the Organization of the Petroleum Exporting Countries in its September oil market report revised its 2024 demand growth projection lower to 2.03 million barrels per day, down from 2.11 million barrels earlier, and trimmed the 2025 estimate to 1.74 million barrels per day from the previous figure of 1.78 million barrels per day. China has the largest chunk of the downgrade as OPEC sees oil demand in the world's second largest economy growing by 650,000 barrels per day this year. Chariot Limited has announced that drilling operations are ongoing at the Anchois 3 well in Morocco. The company says preliminary findings indicate the presence of gas-bearing reservoirs in the main hole phase of the well. The initial pilot hole did not yield positive results, but the company remains optimistic about the potential of the Anchois 3 well. Oil and gas exploration company Aminex and its joint venture partner ARA Petroleum of Tanzania have officially received the 25-year development license for the Ntoya gas discovery area in Tanzania. According to the gas sales agreement, the companies expect to produce 40 to 60 million standard cubic feet a day in the first year, with an increase to 140 million within a few years. This volume is set to increase Tanzania's gas production by between 20 to 80%. South Africa has secured 2 grants worth 628 million rands from the European Union to enable its green hydrogen strategy. The first grant, totaling 490 million rand, is expected to unlock 10 billion rand in investments across the green hydrogen value chain, including storage and downstream industries. The second grant of 138 million rand will assist state-owned Transnet Logistics in its green transformation, allowing the company to achieve its net zero emissions target by 2040. Grid Africa, a leading provider of hybrid energy solutions, has officially entered the Zambian market. The company is offering advanced solar and lithium battery and generator backup systems to commercial and industrial clients in the southern African country. The solution will help to address the country's ongoing energy challenges by reducing energy costs and ensure continued business operations. A major breakthrough for clean cooking in Africa as the Global LPG Partnership and the African Refiners and Distributors Association have announced a $1.5 billion fund dedicated to promoting LPG as a primary cooking fuel. The fund will support infrastructure development, distribution networks, and consumer education programs in order to reduce reliance on biomass fuels. And that's the summary of your energy news headlines. There is no end in sight yet for Egypt's ongoing energy crisis as the country's gas supplies remain shaky. Coming up next, we get expert insights into what the present energy troubles mean for the future of the North Africa's biggest economy and the region. Egypt is currently facing a severe electricity crisis driven by declining domestic gas production, rising demand, and ongoing economic challenges. While foreign aid such as a $200 million financing package from Saudi Arabia and Libya may have helped to ease some of the strain, the country still faces a significant shortfall, with summer demand alone estimated at $2 billion. But there are other pain points for Egypt, a country at the intersection of global geopolitics and crises around the Middle East and the Sahel region. To dig deeper into all of these, I spoke with Robin Mills, the CEO of Kama Energy, a consultancy firm based in the UAE.
Well, the big problem it comes from 2015 when Egypt discovered the Zohr field, a very large gas field offshore, and thought that this would solve all of its gas problems, and converted several power stations to gas, built some very new large gas-fired power stations. And for a few years, it was in a very good situation. It had plenty of gas. It had a surplus. It was exporting gas again, as it hadn't done for a few years. But unfortunately, over the past couple of years, Zohr production has been declining. It seems that the reserves there were smaller than anticipated. The geology was more complex than expected. So the Zohr field is, though it's still a very large field, its production is declining quite fast. And there haven't been really any new major gas developments or gas finds in Egypt since. So Egypt faces several years in which gas production will be declining. And it hasn't really got any easy sources of new gas imports other than these liquefied natural gas cargoes, which are quite expensive.
Now, what are the long-term implications for Egypt's reliance on foreign financing to meet its gas and energy needs?
Well, it's a problem because Egypt runs a big trade deficit normally, and gas, imported gas, is now a significant part of that, along with imported oil as well. And this situation is going to get worse. Egypt will buy more LNG. It may buy oil continue buying oil. It may buy more gas from Israel, one of its neighbors, maybe from Cyprus too. But all this means more export bills, and that puts more pressure on the currency, which is devalued several times, and more pressure on the government budget, which is very stretched. And you mentioned, the bailout they had recently from the IMF, from Saudi Arabia and Libya, and also money from the UAE, and that's all helpful. But that money is unfortunately quickly going to be spent, and they would again be needing some kind of financing support.
Now, I am concerned about the sustainability. How much longer do you think Egypt can sustain its huge demand for LNG from outside its shores?
Well, it's a question of financial sustainability. I mean, there is LNG on the world market, and there will be more LNG over the next couple of years. There are new projects in Qatar, in the US, in Canada, in Nigeria, and other places. So there will be more LNG available. It's just a question of price. So it's an economic burden on Egypt, really. Right now, it's not great because there isn't as much LNG this year, and Europe will need supplies over the winter and so on. But next year things are a lot more comfortable. But it's really about the economic burden on Egypt, and of course the Egyptian economy is struggling for other reasons as well. And one of those reasons is the attacks on shipping in the Red Sea, and that means that the amount of shipping using the Suez Canal has dropped very significantly. That was always a big source of earnings for Egypt, and that's been cut a lot. So Egypt has some other problems to deal with at the same time.
Right. Now that you mentioned the Middle East crisis, how much of this regional conflict in that region is impacting Egypt's gas supply and indeed the economy?
Well, it affects the economy because of the loss of shipping through the Suez Canal, as I say. It affects obviously tourism and business confidence in the region. And as far as gas, so Egypt already imports significant amounts of gas from Israel. It hasn't really got any alternatives to that. But of course, with the current political situation, it's not happy to be so dependent on Israel. And ordinary Egyptians are not happy about that either. So there were some attempts to increase imports from Israel, and those will probably continue. They were delayed by the war. But that's really Egypt's only short-term alternative is to get more gas delivered through pipelines from Israel.
So, do you have any idea how the administration of LCC in Cairo is addressing the decline in domestic gas production?
So really, they have three options, and they're trying to do all of these three. The first one is to import more gas as LNG and gas through pipelines from neighbours, and that is indeed progressing. But as I say, it's expensive, so they have to find financing for it. The second option is to boost domestic production. So they have actually been quite active over the past few months in trying to encourage more drilling, more gas developments, more exploration. But that all takes time. If there's a gas discovery today, it will be several years before that could come into production. So this is not a short-term fix. And the third thing is to boost the use of renewable energy, so solar and wind power, to use that for electricity instead of gas. And that has also been active. So there were a couple of years, 2020, 2021, where things really went quiet in Egypt around renewables. That's now come back. There's a very active renewables program, and that will help. But again, it takes time to build these projects. So it'll be a couple of years before those start helping out.
For me, I kind of find it interesting because I feel like this would be an opportunity for other parts of Africa in terms of exports to Egypt as well. So what are your thoughts on this?
Well, I think for all the big LNG exporters in Africa, they're looking for markets right now. There's a lot of competition, so indeed they will be they'll be keen to look at Egypt as a market. And you have, of course, in North Africa, Algeria, which is obviously near to Egypt as a major exporter, and then you have Nigeria and Angola. Those are really the big LNG exporters in Africa today. But they will be joined in the next few years by Mozambique, by Senegal and Mauritania. And maybe some other countries as well. So there's a lot of LNG opportunity here for Africa to boost its exports, and Egypt is of course a near market for some of these countries.
Now, what are your outlook? What's your outlook on Egypt in the near term? Do you see these issues being addressed as quickly as possible?
Yes, look, I think they realise the seriousness of the problem, and there's a lot of effort to address it now through the options that I mentioned. The problem is that they take time, and this problem with Zohar really kind of came up quite quickly, and maybe they didn't respond fast enough. They didn't realise that production was declining as fast as it was, and how serious effect that would have. So last year they were already still exporting LNG. They actually still had a surplus, at least in some months. So running back into a deficit and having to import was a bit of a shock, and has led to all these gas shortages and power cuts. And that affects the rest of the economy, of course. So they realise how serious the problem is. It's just that unfortunately, the solutions are, 2-3 years at least, and 4 to 5 years in some cases before they really have an effect.
A UN panel is calling for a just and equitable approach to the mining of critical minerals in resource-rich developing countries. That's next on Energy Frontiers. This is Energy Frontiers. A new report by the United Nations has called for a more sustainable and equitable approach to the mining of critical minerals, which are essential for the transition to clean energy. The panel, co-chaired by South Africa's Ambassador Diseko and the European Commission's Director General Diet Jorgensen, highlighted the importance of avoiding the mistakes of the past and ensuring that mining benefits developing countries without harming their economies and the environment. And there is more in that panel report. Let's take an excerpt.
The history of mining is not a completely blemishless one with respect to developing countries, the majority of whom are producer countries and hold these minerals. It is the hope that in reading this report, it'll inspire people to focus more on ensuring that as we draw on these minerals, we do not disfigure the economies of the producer countries. We do not disable them and incapacitate them while extracting and benefiting and ensuring that we somehow rise to the challenge of meeting our climate change goals. So at the heart of it is the need to look at the development issues such as value addition, beneficiation at a source, equity and justice within and between nations, intergenerational equality, and gender issues across the value chain, as it were. It is important that the essence of this report is to inspire care and caution to avoid the mistakes of the past, where we are already seeing conflict generated by the scramble for these resources, particularly in my continent, that is bleeding. Cobalt Red, the book, illustrates that. The title of it, I read red to mean that our continent is bleeding already in the rush to extract these minerals, in complete disregard of norms that have held society together since the Second World War, at the heart of which is human rights and other important areas such as the environment that must be safeguarded as we extract.
So really to reduce the distance from what is on paper, what are the existing rights and principles on which we all agree, and what is the reality? How are those rights and principles realized? How do they benefit peoples, whether it is artisanal small-scale miners locally, or whether it is women, indigenous people, whether it is at the extraction and exploration, or whether it is further down the value chain, also to make sure that that value chain does not have a larger than necessary impact on the climate through greenhouse gas emissions, and that they do not damage the environment. And so that is what the actionable recommendations are about. I think the actionable recommendations clearly show that more is needed. We've done our best over these past 4 months, but what now needs to happen is really a follow-up and action to help make that a reality. In the actionable recommendations, as you have said, we are addressing specifically the questions related to development and value addition, the possibilities, the opportunities for developing countries, both resource-rich developing countries, but also other countries that do not currently reap the benefit, through suggesting an establishment of a high-level advisory group to take forward these challenges, including challenges related to trade, working with UNCTAD and the WTO, but also challenges related to human rights through the human rights bodies of the UN system, hopefully moving forward and taking up these issues. Traceability, transparency, accountability are critical to bring change and to improve the situation. Only if we can trace where are minerals from, what are the value chains, are the value chains sustainable, have rights been respected, has the environment been protected, and we're doing what we can. That requires traceability to lift the floor globally to make sure that the practices overall are better. So that is another actionable recommendation for the establishment of a traceability system, a system that will also help artisanal and small-scale miners that are some of the people that have the hardest circumstances and that benefit the least from the minerals value chain that they are part of, but also, again, indigenous peoples whose rights and opportunities must be promoted and implemented in all the work here. And so a traceability scheme work towards that is really a critical recommendation, together with a specific recommendation for an initiative to address the concerns and help improve, give a voice to artisanal and small-scale miners there. In our work, we have been looking both at the past and at the future, focusing on change and what needs to be done within the field of environmental protection, As regards the past, there are legacy issues, there are legacy mines, and so we also recommend the establishment of a legacy mining fund that can help ensure that there is financing available for the cleanup of the legacy mines that are out there. And then looking ahead into the future, suggesting the establishment of targets and a scheme for circularity, simply making better use of the materials we have and making sure that our minerals use will not have a negative impact on the environment going forward.
And finally, fun and entertainment are not left out from the African Energy Week 2024, as the knowledge event will focus on not only energy investment and development, but also celebrate youth, innovation, and the broader energy sector through music and culture. The Just Energy Transition concert, scheduled for Monday, November 4 in Cape Town, aims to foster a more inclusive and engaging atmosphere for wider participation and investment in Africa's energy future. To register and secure your spot, visit the event website at www.aecweek.com. And that's how we wrap up this package of Energy Frontiers at this time. We appreciate you for making the time to watch the show each week. Remember to follow the show on Frontier Africa Report's website, like all the video editions, send in your comments, and subscribe to our YouTube. Kindly follow us as well across all our social media handles as indicated. I am Justina Okechukwu, and this is Energy Frontiers.